I'm going to put my flipper hat on here in a second. Back flipper hat on. And we are going to get into it here on the question of the day, which is title insurance a ripoff? All right, Bob. So listen, I'm an experienced flipper. I flipped 6 homes last year. This year, I plan to do 10, maybe more. And I've been doing this for a while. And you know how it is. You're in these deals for at most 6 months. So why do I need title insurance if I'm going to be in and out of this property in 180 days or less?
Well, Flipper Mike, that's a good question. And the first answer is because your lender is probably going to require it. And that is because the community of investors who actually buy the loans that companies like Backflip originate require title insurance, and within just that overall general requirement of having to have title insurance, there are certain specific things that they require in the policies. Now, there are probably going to be a handful of lenders who don't require it because they're using their own money, but those are limited operators, limited private money operators. Most lenders of any scale, including Backflip, can't originate and hold loans on their own balance sheet in any kind of quantity, and so they have to comply with the secondary mortgage market requirements. That's what we call the requirements of these folks who invest in closed loans. It's the secondary mortgage market, and so they require it. Additionally, you're going to want to sell your property once you're done flipping it. And that is often going to be to an owner-occupant who is going to be obtaining conventional financing. And by that, we mean financing by one of the government-sponsored entities, Fannie Mae, Freddie Mac, Ginnie Mae. And so those folks also require title insurance. And they have very specific requirements and fairly strict requirements about what the survey can show, for example, that supports the insurance policy. And so you have to get it for that reason as well.
Okay, I'm going to push on this a little bit, Bob. I get that there needs to be some coverage in place, but again, I've been doing this. Why can't I just rely on the lender's policy?
Okay, well, I think this is a good time, Mariah, to show the next slide in the presentation. There are 2 policies potentially available here: a lender's policy and an owner's policy. And those are 2 distinct contracts. And let's keep in mind that insurance is a contract. And so Mike's question, which is also a good one, basically says, okay, so if you have to get a lender's policy, do I have to also pay for an owner's policy? And the reality is that those are 2 separate contracts with 2 different insured entities. So if you don't get your own policy and you want to make a claim, you can't make it on the lender's policy. The lender is the insured party on the lender policy, and only the lender can make a claim. So there are certain circumstances where certain scenarios that might crop up where you might want to make a claim and the lender might not make a claim. The lender might not even be able to make a claim if they get paid off. And it really is, because one of the significant the reasons that might happen is because one of the significant differences between the owner's policy and the lender's policy is the amount of the policy. When you get an owner's policy, you're insured for the full value of the property. The lender is only insured up to the amount of their loan, which is going to be significantly less than the value of the property, especially after Flipper Mike has worked hard to build sweat equity into this property. And so it's not just his down payment that's at risk, but also the value of a lot of his improvements that he's made. And so there is that big gap between the owner's policy and the lender's policy that has to be kept in mind. So there's often a commonality of interest between the owner and the lender when it comes to title insurance policies. If there's the claim of a prior lien holder, well, we're both going to be interested in that. But if it's a small lien and it's going to be covered by Flipper Mike's equity, the lender may not care enough to pursue a claim, but you as the owner would want to pursue that claim. So you can't really rely on the lender's policy because you don't have any rights under that policy. So with respect to this slide, I just wanted to cover a few other things that are covered by title insurance and why you should get it. So of course, it covers title, which is, do you own the property that you think you're buying? And that's obviously a very important thing. Does the person who's selling it to you and the person who's signing the documents have the authority to sign the documents in order to convey it to you? And so this is why you're asked about your capacity to sign documents and about your borrowing entity if you're using a borrowing entity. And the same will be true if the seller is an entity. It's up to the closing agent to check to make sure that there's proper authority. And so you want that to happen as well. It's not just about, are there competing liens on your property, but or does the seller actually own the property? But it's, does the person signing have authority so the closing agent is responsible for that? I wanted to talk about, you're going to see these abbreviations, ALTA, CLTA, and what are these things? When you see ALTA, you'll see the ALTA 8.1 endorsement and things like this. Well, that's the American Land Title Association. And title insurance, like all insurance, is a matter of state law under our Constitution and our federal system. And so there's a lot of variation in title insurance based on the state. But many states follow the ALTA standard. Many states in the West follow the California Land Title Association standard. And some states like Texas have their own state law. They don't follow ALTA or CLTA. So that's what that means. And you rarely have a choice here. But when you do, you should prefer the ALTA policies. They are slightly more in favor of the insured, which is you and us at Backflip if we're your lender, and we hope to be your lender. And so we would prefer the ALTA over the CLTA. So that's it, Mike. But I should think I've answered all your questions at this point, Mike.
Well, my friend Kevin has got one more question. So I get it. Before we move on to the next topic about why it's so dang complicated, I was talking to my friend Kevin, and he's got a great question. Why on earth do we need to get title insurance again if the chain of title is clear as day only 90 days later? So, Bob, if you can answer my good friend Kevin's question here, why on earth do I have to get title insurance again if the chain of title is clear as day only 90 days later?
Well, if the transaction is being insured by the same insurer, then there can be a lower premium. But oftentimes the new transaction is being insured by another insurer. So they're taking on all of the risk that the prior insurer was taking on. And so they have to write a new policy and they have to take on that risk themselves. So it's really, again, we're getting back to title insurance as a contract. The first transaction at 90 days ago was with another insurer, but this transaction is with a second insurer who has to cover themselves for the risk of that transaction. But yeah, it does seem a little perverse. And there are some savings that should apply to a new policy within 90 days. The survey might still be valid. There are some things, although 90 days is right at the edge of validity, I believe, for a survey. Again, because things can change in 90 days. So the new insurer and the new closing agent on that second transaction still have to do the same kind of work that the first closing agent had to do. They still have to, run a title search, review the condition of title, see if anything's changed in the last 90 days. So, but I get it. From a practical standpoint, it does seem like it's a ripoff.
So,
That's
Bob,
a great question, Kevin.
great. But it just seems so complicated. I mean, can you just explain to me what title insurance actually does?
Sure. Well, I think I can. It is a pretty big deal, and it does cover you, as we've said a little bit earlier. It does make sure that you have marketable title to the property, and you want to have that when you get ready to sell the property. And there's going to have to be a title policy written in connection with a subsequent sale of the property. And you really want to find out if there are any problems with title